Want my latest market insights? My latest report, Catching This Falling Knife of Metal Madness, is now available. Scan this QR code or click on the link in the description. I'm not worried so much about the majors and such within the energy space, the companies themselves. But as it relates to price, I think that we have a current upswing because of geopolitical risk, but we have a structural downswing because of falling global oil demand.
Well, that's going to be bad news to people who are piling in on oil stocks right now, Samantha, because that's
No,
quite
not right now. Right now, it's a great time to pile in on oil stocks because, like I said, they're entrenched, asset-rich, industrial, and their large cap value. I love, this has been a major theme, getting out of growth. And it was November 26th. I'm like, this is it. We're rotating into large value out of tech. And it's been in play for all of December, January, and here we are, February. The only stocks that were green yesterday were large cap value. So we have this entrenched asset base of industrialization that is not easy to replace. So I'm just saying we have a lot of hits right now that are coming in the oil industry, in the software industry. They're totally unrelated. I mean, the one common factor might be Trump, but the point is we've got AI as a structural change. We have falling oil global demand as a structural change. And what's he really going to be able to do about it? It's not about taco anymore. Even if he comes out in April in the U.S.-China summit and he completely says, I was just kidding. Let's go back to the way it was. Right? Really, what are the chances that that's going to happen? And still, is it going to change the structural tectonic shift that's happening in AI as it relates to software companies needing to decide, are we going to be able to survive or thrive? And investors trying to figure that out with them. And then, of course, same thing with the oil and gas space. So I know why people hold out in metals. There's no question about it. I just don't think that the FOMO that people get so excited about, you should not be complacent. When you see a parabola, know that it will trigger volatility and those trapped longs will liquidate, especially short or intermediate traders.
Yeah, and I think you've got to be careful as well with any leverage plays on these things because the miners are extremely volatile. They are going to move double, triple what silver does. And they're all cyclical stocks as well. So if you buy at the right time, they can be fantastic. You get that volatility on the upswing and you can see the cycle go up. And these individual stocks in the last silver bull run, just going into January, were up 450%. Some of these stocks, 350%. On the downside, yeah, they can fall 80, 90%. I've seen it happen many times. So it's really about timing. And that's where I think somebody like you is really useful because the long-term thesis, people can listen to someone like me and they can hear about these ideas that I put out there. But in the short term, if you are going to be buying miners, if you are going to be buying oil stocks, you do need to have that short-term predictive capacity. And that's the hard bit because you can confuse the long-term one with the short-term one. And it's not always the case as we're finding out. And sadly, I do know a lot of people were piling into miners just last week with the FOMO. And
exactly.
Yeah, you could easily see yourself down 50, 60% in a month. And that's going to be hard because now you've got to get up another 120% just to break even. And yeah, that's not where you want to be.
But I think a lot of people right now who are hurting are from the crypto mania, from the metal volatility of late, and from the software crash that also is unnerving to those who have a very strong understanding of tech, but the old tech, not the disruption from AI. And I know that silver exploded higher, but a confidence in future delivery imploded. So we had this perfect storm of why folks were piling in to silver. The physical inventory was eroding and they got very, very nervous. But as I mentioned, there's a lot of sentiment that also gets built into stocks. And if you have a nice and 45-degree angle up and to the right, boring but profitable miner, there's no reason to get out. I'm still very bullish on miners, but I'm very bullish on, it's also very kind of classical or traditional finance, the more entrenched and established miners. I'm not looking for the explorers and the juniors that don't have funding, that don't, have not just funding, but also fines. I want the stuff that's absolutely there and they're already built out. The inflationary costs of building out right now and the cost of funding right now is ridiculous. So betting on that wildcat type of experience isn't me. So I'm still going to recommend strongly those inflationary, asset-rich, entrenched boomer stocks whether they're in mining, whether they're in energy, whether they're in, true industrial renaissance is in our U.S. economy. They're not easy to replace. I still think that's going to be our theme for 2026, and metals are going to be part of that.